What if I told you the next phase of the AI boom isn't about building faster chips, but about fixing a hidden choke point that's quietly limiting everything? Over the past year, four under-the-radar stocks tied to this breakthrough have surged more than 600%, yet most retail investors still have no idea they exist. While headlines obsess over chip makers like Nvidia, the real leverage may be sitting one layer deeper in the infrastructure stack. And here's the part Wall Street is only beginning to grasp. Without solving this bottleneck, even the most powerful AI processors can't operate at full capacity. By the end of this video, you'll see why this overlooked corner of the market could produce some of the biggest winners of 2026, and which name is rising to the top of my personal radar. Welcome back to the channel. If you're serious about spotting asymmetric opportunities before they become mainstream, you're in the right place. We focus on structural shifts, not hype cycles, because the biggest returns rarely come from what everyone is already talking about. They come from the enabling technologies that make the trend possible in the first place. If that sounds like your style of investing, make sure you're following along, because the shift unfolding right now in AI infrastructure is bigger than most people realize. Let's break this down. Artificial intelligence is scaling at an unprecedented rate. Data centers are expanding. Training models are getting larger. Compute demand is exploding. And yes, advanced GPUs are critical to this growth, but there's a physical constraint emerging that few outside the industry fully appreciate. It's something engineers refer to as the copper wall. Think of it like owning the fastest supercomputer in the world, only to discover that the pathways connecting its components can't transfer information fast enough. The processors are ready, the demand is there, but the data simply cannot move efficiently through traditional copper interconnects. Copper has served the digital world for decades. It's reliable, cost-effective, and deeply embedded in data center design. But physics doesn't negotiate. As AI workloads scale, bandwidth requirements surge, and latency tolerances shrink. Electrical signaling through copper wiring starts to lose efficiency over longer distances and higher speeds. Heat increases, power consumption rises, signal integrity degrades. At extreme performance levels, copper becomes the limiting factor. That's where optical networking and photonics step in. Instead of sending electrical signals through metal, these systems transmit data using pulses of light through fiber. Light travels faster, generates less heat, and maintains signal strength across longer distances. In high-performance computing environments, that difference is not incremental, it's transformative. Optical interconnects allow AI clusters to scale without hitting the same physical barriers that copper faces. This isn't theoretical. Major data center operators are already integrating photonic solutions into next-generation infrastructure. As AI models demand tighter, faster communication between thousands of GPUs, optical networking becomes less of a luxury and more of a necessity. That shift is why companies operating in this space have experienced explosive momentum. Revenue growth is accelerating. Order backlogs are expanding. And industry forecasts project sustained double-digit expansion through the remainder of the decade. What makes this opportunity particularly compelling is that these are not speculative science experiments. They are established players supplying mission-critical components to the largest technology platforms in the world. As AI investment continues to pour into infrastructure, the companies enabling faster, more efficient data transfer may quietly capture a disproportionate share of value creation. And while much of the market is still focused on the obvious names, the smart money is already studying the layers beneath them. What if I told you that four relatively unknown stocks have surged more than 600% in just a single year, and most retail investors still have no idea they even exist? While everyone is busy talking about AI giants like Nvidia and chasing the obvious names, a completely different layer of the AI ecosystem has been quietly exploding. And here's the part that should really get your attention. Wall Street analysts are still adjusting their forecasts, still raising price targets, still trying to catch up to what's happening on the ground. By the time this shift becomes obvious to everyone, the biggest gains may already be gone. So stay with me, because by the end of this breakdown, you'll understand why these companies could be among the biggest winners heading into 2026. And I'll tell you which one I'm personally watching for the next pullback. Welcome back. If you're new here, this is where we focus on high-growth opportunities hiding beneath mainstream headlines. We don't just follow hype, we look for structural shifts, because real wealth in the market is built by identifying bottlenecks and the companies solving them before the crowd fully understands what's happening. Right now, artificial intelligence is expanding at a pace we've never seen before. Data centers are scaling. Compute clusters are growing. AI models are getting larger and more complex. But there's a serious constraint that most investors aren't even thinking about. It's called the copper wall. AI chips today are incredibly powerful. They can process massive amounts of data at extraordinary speeds. But the problem isn't the chip itself. The problem is how that data moves between chips, servers, and entire clusters inside massive data centers. Traditional copper interconnects are hitting physical limitations. Electrical signals degrade at higher speeds, heat increases, energy efficiency drops, and latency becomes a real challenge as workloads scale. Imagine building the fastest supercar in the world, but forcing it to drive through a narrow city street during rush hour. That's exactly what's happening inside AI infrastructure. The solution is optical networking and photonics. Instead of using electrical signals through copper wires, these technologies transmit data using light. Light travels faster, maintains signal integrity over longer distances, and consumes less power at scale. This isn't futuristic theory. It's already being deployed in hyperscale data centers around the world. And the companies manufacturing these optical systems are seeing explosive demand as AI spending accelerates. Last year alone, several stocks in this space surged over 100%, and one climbed more than 600%. Analysts expect multi-year expansion, not just a short-term spike. The growth outlook stretches through the rest of the decade as hyperscalers continue redesigning infrastructure to support AI workloads that are only getting more demanding. And here's what makes this opportunity even more compelling. These aren't speculative startups hoping to survive. These are profitable companies generating real revenue, shipping real products, and partnering with the largest technology players in the world. Before we dive into the individual names, I want you to think about something. How many optical networking or photonics companies can you name without looking them up? Probably not many. That's exactly why this opportunity is so interesting. When institutional investors are building positions aggressively while retail investors are still unaware the space even exists, that's usually when you're early. And being early in a structural shift is where outsized returns are made. Let's start with the first company, Ciena. Ciena has been around for years, operating in networking hardware, software, and services. But what matters right now is its leadership in optical networking, particularly through its WaveLogic platform, which has become a benchmark for high-capacity data transmission. As AI data centers scale, it's no longer enough to just add more servers. The entire data movement architecture has to be upgraded. That's where Ciena becomes critical. The hyperscalers like Amazon, Microsoft, and Google are spending billions expanding AI infrastructure, and that spending isn't slowing down. Every new AI cluster requires faster, denser, more efficient optical transport systems. Ciena sits directly in that demand stream. Over the past year, the stock has surged more than 200%, dramatically outperforming broader indices. What's even more interesting is that it has consistently traded above analyst consensus price targets. Some investors interpret that as a warning sign. But in high momentum growth cycles, it often signals that demand is accelerating faster than analysts can update their models. Institutional ownership in Ciena is extremely high, which tells you large funds see long-term value. Short interest remains low, meaning there isn't strong bearish conviction against the company. Technically, the stock has shown healthy consolidation phases followed by strong breakouts, a pattern often seen in sustained growth trends. Of course, short-term pullbacks can happen, especially around earnings, but the broader trajectory aligns with structural AI infrastructure expansion. Now let's move to the second company, Lumentum. This is where the connection to Nvidia becomes very clear. Lumentum specializes in lasers, modulators, and optical engines that enable high-speed data transmission inside AI systems. As Nvidia pushes deeper into photonic interconnect ecosystems to solve the copper bottleneck, suppliers like Lumentum benefit directly. The stock has delivered staggering gains, climbing more than 600% within a year. That kind of move doesn't happen without real catalysts. Recent earnings reports showed strong revenue growth and profitability, confirming that demand isn't theoretical. It's operational and expanding. After such rapid appreciation, consolidation is normal and even healthy. The key question isn't whether the stock pauses, it's whether the long-term demand for optical interconnects continues growing. So far, all signs suggest it does. Let's continue with our third company, Coherent. Unlike Lumentum, which is surging, Coherent has recently experienced a pullback despite reporting strong earnings and beating expectations on both revenue and profit. At first glance, this might seem discouraging, but for savvy investors, it's an opportunity. Coherent operates across multiple segments of the photonics supply chain, from lasers to measurement systems, and even collaborates with Nvidia on advanced optical components. The diversity of its business gives it resilience and multiple avenues for growth, which is exactly what you want when evaluating long-term trends in AI infrastructure. One reason the stock has pulled back could be slower analyst target adjustments. Often when a company is fundamentally strong, but analysts lag in updating their price projections, short-term price corrections happen. The stock is currently trading around 218, which for many could represent an attractive entry point compared to Lumentum or Ciena, whose prices have already raced higher. If you believe in the structural story, AI workloads increasing exponentially, hyperscalers spending aggressively, and copper limitations persisting, then Coherent's pullback is more like a discount than a red flag. The broader market context is important too. There has been chatter about a potential AI bubble, suggesting companies might cut back on infrastructure spending, but the real-world earnings data tells a different story. Memory manufacturers, semiconductor firms, and networking companies are all reporting robust demand. Hyperscalers are not pulling back. They're increasing capital expenditures to meet AI workloads. Coherent sites right at the intersection of this demand, offering components that are mission-critical for data center upgrades and next-generation AI interconnects. Technically, Coherent's chart shows a period of consolidation followed by minor resistance, which often sets up for a breakout when the sector momentum resumes. Institutional ownership is solid, meaning professional investors see long-term value despite short-term volatility. Short interest remains moderate, suggesting that while some traders might be cautious, the majority of market participants recognize the strategic importance of Coherent's offerings. For anyone building a watch list of AI infrastructure plays, Coherent offers a mix of growth potential, technical stability, and a reasonable entry point that could outperform if the sector continues its explosive expansion. The pullback in Coherent should also remind investors of a critical point. You don't always buy the hottest stock at its peak. Sometimes the best opportunities come when a fundamentally strong company temporarily stalls. It's also a reminder of the advantage of understanding the underlying technology. Investors who know why photonics is essential to overcoming the copper wall can act strategically rather than reactively. Coherent's position across multiple segments and partnerships with leading AI players means it's not just riding the trend, it's helping define the future of AI data infrastructure. Patience combined with knowledge is what turns a temporary dip into a long-term gain. Finally, let's talk about our fourth company, MKS Instruments. This one plays a slightly different but equally crucial role in the AI infrastructure revolution. While Ciena, Lumentum, and Coherent are building the optical components and photonic systems that move massive amounts of data, MKS Instruments provides the tools, testing equipment, and laser systems that make sure those components work perfectly. Think about it like the gold rush. The miners might get all the attention, but the people selling pickaxes, shovels, and essential tools often make the most reliable money. That's exactly the role MKS plays in the photonics boom. Every new optical networking system, every high-speed data center connection needs precision testing and measurement, and MKS supplies that. The growth story here is impressive. Over the last 12 months, the stock has climbed about 124%, and it's up 56% year to date. These are solid returns, but what makes MKS exciting is that it's tied directly to the broader expansion of the photonics and AI data center market. As companies like Nvidia, Amazon, and Google continue to push the limits of AI, the demand for highly accurate, reliable testing and control systems will only increase. MKS benefits from every step in the photonics supply chain because any disruption in quality or performance at the component level would slow down the entire network, and MKS ensures that doesn't happen. They're effectively enabling the growth of their peers, which in turn drives demand for their own products. One key factor investors love is the predictability of MKS's business. Unlike speculative startups, these are established, profitable operations with recurring demand. Their customers aren't experimenting. They are deploying mission-critical systems that must perform reliably. MKS's products span measurement, control, and laser systems for photonics manufacturing, which means they are embedded in the essential workflow of AI infrastructure production. The combination of recurring revenue, high barriers to entry, and critical demand makes MKS a strategic play that isn't just tied to hype. it's tied to the actual functioning of next-generation AI networks. From a technical perspective, the stock has shown strong momentum with intermittent pullbacks, which often create favorable entry points. Institutional investors are active here, but because MKS isn't always in the headlines, there's still room for growth as the market fully recognizes its role. For long-term investors, it's an ideal complement to stocks like Ciena and Lumentum. You're not just betting on the fastest growing companies, you're investing in the ecosystem that makes all of these breakthroughs possible. In other words, MKS is a picks and shovels stock for the AI infrastructure boom, providing stability, growth, and exposure to one of the most transformative technological waves of the decade. The broader lesson here is simple, yet absolutely critical for anyone serious about investing in technology and high-growth sectors. In today's market, it's easy to get swept up in the hype. When a stock skyrockets, it can feel like the only way to participate in the opportunity is to jump in immediately. But history has shown that chasing momentum after a parabolic move is rarely the best approach. You're often paying a premium for expectations that are already baked into the stock price. Instead, the smarter move is to build a watch list, study the technology, and focus on companies that are solving real, tangible problems, businesses that aren't dependent on speculation but rather on actual demand, execution, and innovation. MKS Instruments is a perfect example of this strategy in action. They're not simply riding the AI and photonics trend because it's popular, they're a foundational part of it. Without companies like MKS providing the precision tools, testing systems, and laser measurement solutions, the next generation optical components that power AI infrastructure couldn't be manufactured at scale or with the reliability that hyperscalers demand. Optical networking and photonics have transitioned from being niche technological concepts to being mission critical for the AI era. Every hyperscale data center, every AI accelerator, and every cloud computing backbone relies on the ability to transmit massive volumes of data quickly, accurately, and reliably. And the companies building those systems can only operate as efficiently as the tools and testing solutions allow. That's where MKS Instruments comes in. They ensure that the hardware powering AI is not only fast, but also precise and dependable, which is essential when milliseconds and errors can mean the difference between success and failure in high-speed computing environments. By solving these underlying infrastructure challenges, MKS is enabling the AI revolution itself, and their role is often overlooked because they aren't as flashy as the chip makers or the hyperscalers. This is exactly why informed investors who understand the ecosystem have a significant advantage. For investors looking to position themselves early in the AI infrastructure boom, there's a clear strategy that balances risk and reward, pairing high momentum players like Lumentum or Coherent, which are experiencing explosive growth, with essential service providers like MKS, creates a portfolio that captures both rapid upside potential and stable ongoing demand. Timing matters, knowledge matters, and understanding the ecosystem is what separates smart long-term investors from those chasing short-term spikes. By looking beyond the surface, you can identify companies whose products are mission critical, whose revenue is recurring, and whose growth is supported by a secular trend that isn't going away. The AI revolution isn't a temporary hype cycle. It's a structural shift in computing, data processing, and global technology infrastructure. MKS is perfectly positioned to capture value from every corner of this expanding market. As demand for AI and data center capacity grows, every photonic component produced by Lumentum or Coherent must pass through the systems, testing, and controls provided by MKS. That means their addressable market expands in parallel with the growth of the AI ecosystem itself. For long-term investors, this dual exposure, direct involvement in AI infrastructure combined with essential service provision offers both growth and stability. It's precisely this combination of relevance, necessity, and execution that makes MKS a company that should not be overlooked. For anyone serious about understanding the next wave of AI infrastructure, MKS is not just a stock to watch. It's a company that represents the backbone of a technological revolution, and positioning yourself early could be one of the smartest decisions you make in the coming years.